and welcome to our meeting today to discuss the Savers Advantage Home Health Care Insurance Policy issued by Standard Life and Casualty, located in Salt Lake City, Utah. Savers Marketing is extremely excited to be involved in the distribution of the home health care product with Standard Life. We're excited about the tremendous value it provides the consumer while allowing the agent at the same time to make excellent income and commission dollars from selling the product. Now let's jump right in and get started. And what we want to talk about today, just to summarize, we're going to review the consumer brochure. We're going to review the rate sheets and the application, the agent guide, and how the consumer simply would file a claim. So let's jump right in, and hopefully on your screen, the first thing I want you to take a look at is the consumer brochure. You'll notice right there in front of you should say Savers Advantage Home Health Care Insurance. Now I'm going to scroll down to the second page, and let's jump right into the benefits here. You'll see right there about the middle of the page on the right-hand side, the home health care benefits. What your insured or your policyholder will have an option of doing, or the applicant, is to pick either classic coverage or deluxe. Now, for an example, in the classic column, the insured can receive dollar amounts or benefits paid to them according to the following schedule. If your insured has a registered nurse come out to the house, it would pay $75 per day. If they have an LPN or LVN general nurse, $60 per day, $75 for the physical therapist, speech pathology $75, occupational therapy $75, chemotherapy specialist $60, intrastomial therapy $50, respiration therapy $50, and medical social services $100. Now, I read from you the classic column, which means the insured could have any combination of those daily payments paid to them if they had those services rendered by Standard Life and Casualty, up to $150 per day on the classic. Now, $150 per day on the classic. Now, you'll also notice that we have on there, right beside the $150 for the classic, we have the deluxe. The deluxe basically doubles those daily amounts up to $300 per day. Now, your benefit period is going to be 360 days. So, in simple terms, if your client has the deluxe model, $300 per day max, up to 360 days, is going to give them somewhere around approximately $109,000 maximum benefit amount that they could take advantage of. Now, if we also go down to the if we look down below that, we will see the home health care aid benefit. Now, home health care aid benefit simply states daily benefit of $40 on the classic or $80 on the deluxe for each day you require services immediately following a hospital confinement of not less than 3 days. Now, keep in mind, that's $40 for classic, $80 for the deluxe. What an aid does is simply come out, and some of the things they perform would include light housekeeping, some cleaning, some cooking, and stuff of that nature that simply would help that person maintain their lifestyle and stay in the home. Now, keep in mind, Standard does require a 3-day hospital confinement and to be able to take advantage of this benefit. Now, I want to mention this and take a second to tell you that the aid requires a 3-day hospital confinement. However, the main benefits above the aid, meaning the regular home health care benefits such that provided by a registered nurse or general nurse, the therapy sessions, all those items listed above do not require a prior 3-day hospital confinement. They do not. The only thing that requires a 3-day hospital confinement is the aid benefit. Now, as we scroll back down, we see prescription drug benefit. What Standard Life and Casualty is going to do is any generic prescription drug your policyholder has, Standard's going to pay $10 for the generic or $25 for any non-generic prescription like brand name, limited to a maximum benefit of $300 on the classic and $600 on the deluxe. So think about it. $10 on generic, $25 on a brand name. Standard does not care that you have prescription drug coverage under, for an example, a Medicare plan or on an ACA or Obamacare plan. Standard's going to pay the prescription benefit in addition to any other coverage you have. It works that way because this is an indemnity plan. It doesn't care what other coverage you have. It pays in addition to other coverage. I'll give you a great example. Your client may have a Medicare Advantage plan with several or any of the Medicare Advantage companies. They may go out and do mail order prescription drugs on a 90-day basis, and some of the carriers have a zero copay on the Med Advantage for a generic 90-day prescription. Standard says it doesn't matter that you have a zero copay under your Med Advantage. Standard's still going to pay $10 on that prescription because it was a generic prescription drug transaction. So $10 on that particular submitted prescription. Now, below that you'll see restoration of benefits. The maximum benefit period for home health care and aid benefits will be restored if benefits have not been paid or required for 180 consecutive days. That is wonderful. Now, let's scroll down to the next page, and this again is your consumer brochure. You'll see that on the next item there to the top left-hand corner is your extra benefits rider. Now, this whole rider is an optional benefit that can be added to either your classic or deluxe chassis, so to speak, that we talked about previously. Or you can buy classic or deluxe and not add the rider, so it's optional. But the first item under the rider talks about annual physical examination benefit. Benefit of $150 if you have a physical exam performed by a physician more than 12 months after the rider effective date. Same $150 benefit applies in each succeeding 12-month period. So what that really means, folks, is very simple. After the policyholder has had their home health care plan with Standard for 12 months, they go get an annual physical. Standard will pay them $150 for that annual physical, regardless of any other coverage they had that may have paid it in full. Again, it's an indemnity plan that doesn't care about your other coverage. It will pay in addition to. Now, accidental death and dismemberment benefit. As we grow older, unfortunately, what happens to a lot of folks is they encounter an accident. We have built into the Standard Life Casualty Plan an accidental death benefit of $10,000, as well as certain dollar amounts for dismemberment, such as the loss of sight of one eye or both eyes, hand, arm, foot, or leg, finger, or toe. And you'll see the corresponding dollar amounts paid for those dismemberment items. Last but not least, and very, very important at the bottom of this page, is your home medical equipment benefit. Now, what's going to happen here? Standard is going to pay 80% of the 2014 Medicare fee schedule up to $500 for items such as walkers, wheelchairs, hospital beds, shower beds, or shower chairs, commode stools. There are certain type of items that the client may need in their home to allow them to maintain some independence and stay in their home setting. For an example, a shower chair. If you have to go out and get a shower chair, somebody can't stand up or they're afraid they're going to fall, then Standard would have paid 80% up to $500 for those items. We think that's a tremendous benefit, and it hopefully will allow your client, the insured, to maintain independence and stay in the home as long as possible. Now, if we scroll down to the next page, we'll see here plan features and benefits, guarantee renewable for life, 10-day period to examine the policy. 2 people can apply using one application. Now, let's go to page 4, limitations and exclusions. I'm not going to read all that to you, but I do want to mention some key points here. Item number 3, it'll talk about a pre-existing condition. Now, simply stated, any health concern that the applicant had or the insured had prior to the effective date of coverage will not be paid on that condition if they need home health care until after 6 months goes by from the effective date of coverage. So you basically have a 6-month pre-existing condition period. However, in 3 states, and those are Alabama, Georgia, and North Carolina, if the applicant is 65 or older at the time of the effective date or issue of the policy, the 6-month pre-existing condition period does not apply to those folks. So if you're 65 or older at issue, you have no 6-month pre-existing condition period if you are a resident of Alabama, Georgia, and North Carolina. Now, another thing worth mentioning while we're talking about pre-existing conditions, bear in mind, we talked earlier about the tremendous prescription drug benefit that is contained on this policy. The prescription drug benefit does not apply to the pre-existing condition period, or the pre-existing condition period of 6 months doesn't apply to the prescription drug benefit. So simply stated, I can have a policy. I go by the policy. I submit my app today. Let's say it's approved and issued tomorrow. Then tomorrow afternoon, I can go to my drugstore. My personal drugstore that I use is CVS. I can go get my prescriptions filled tomorrow afternoon, because that's the same date as my policy is effective, and I can begin submitting my prescription receipts with my little claim form to Standard, and Standard will start paying back to me $10 on generic or $25 on brand name, up to $300 policy year benefit under the classic, or $600 under the deluxe. So my point is, prescription drugs, you can start filing them the effective date of the coverage, and the pre-existing condition period does not apply to your prescription drug benefit. That is strong, and keep in mind, very important as you're out there making your presentations. Now, the next item I would like to pull up, we just reviewed the consumer application. Let's now go to the rate sheet. Now, just for an example purposes, Standard is approved in many, many states, and they are continuing to file for additional states. But today I just want to use the rate sheets that would pertain to Alabama and Georgia. Now, you'll notice that the issue ages are from 40 to 85, and it's based on a 5-year band or a 5-year increment. So for example purposes, let's look at age, let's go 65 to 70. Now, you see that you have a classic rate of $28.75, or the deluxe. I call it the deluxe model. The Cadillac model is at $57.50, and to the right of that, your extra benefits rider of $13.06. Now remember, your client can buy the classic by itself without any rider, or they can buy the deluxe without any rider, or they can buy either classic or deluxe and add the extra benefits rider to it. So going back to our example, the 70-year-old can buy a classic model, $28.75, and if they want the extra benefits rider, add $13.06 to that. So that's going to be, what, about $41, somewhere around $41, and that would be classic plus the rider. Now, why would you want the deluxe versus the classic? Well, the reason that would happen is, remember, your classic has a $300 prescription drug benefit, but the deluxe has a $600 prescription drug benefit, plus the deluxe doubles the daily amount for the home health care benefits, such as the registered nurse and the therapy services and the aid benefit. So simply put, you got a choice here. You can buy a classic by itself or deluxe by itself, or either one, and add the rider to it. Now, monthly payments have to be bank drafted, or you may also buy quarterly, semi-annual, and annual payments, and those could be direct bill in addition to a draft. So I just covered the rate sheet there. Now pay very close attention. The 65-year-old up to age 70, when they buy this policy, when they turn 71, they will have a rate increase. So for an example, it goes from 70 to 71. It goes from $28.75 to only $37.20. So they're going to pick up, what, about a $9 increase when they go to that next age band. Now, keep in mind that as we look at this, keep in mind that your prescription drug benefit, if your client is using just an average number of prescriptions, what they get back on the prescription, $10 for generic, $25 for brand name, in many cases, and depending on their age, it may help them compensate them for the total cost of the premium for the whole plan. Also, remember, if they bought the extra benefits rider, that rider also pays what? Up to $150 for an annual physical after the policy's been in force 12 months. So conceivably, if they're using a decent number of medicines, they could get back $600 in prescriptions under the deluxe model, $150 for the annual physical. That's $750 they could be getting back potentially that would offset a large part of their premium. So hopefully this will help you in calculating the rates. It's very simple. Now, let's move on. We talked about the brochure, the rates. Let's go to the application kit for Georgia. Just for an example, again, each state has its own application kit, but we'll use Georgia in the example. Now, as I scroll through, the first thing in the 13-page application kit will be an actual copy of the brochure, some of the information that we just talked about, how big that marketplace is. Now, the second or third page actually will be the fax cover sheet. If you're already in the insurance business, you know most companies, when you fax in an application for new business, they're going to have a fax cover sheet that tells you where to fax it to, you know, the name of the proposed insured and the location of the insurance company and all those important things. Now, if you don't want to fax it in, but instead you want to mail in your application, this cover sheet will also give the address for the regular mail or the overnight mail, and then information such as the agent's name, producer ID number, agent number, and contact information. Now, importantly, as we scroll through, we get here to page 4, we're looking at the actual application. Notice it says applicant A and applicant B. Now, our standard is going to allow more than one person to be on the application. In fact, it's going to be 2 people. Now, keep in mind, these 2 people do not have to be married. They don't have to even be living in the same house. Applicant A could be, for an example, myself, and let's say that I had a parent that I wanted to cover on the policy and we live at different addresses. Applicant B could be my parent. So you can put any 2 people on this application. It doesn't matter whether they're related or not. It doesn't matter whether they live in the same household. Now, as we scroll down to that same part of the this page on the application, we'll see the health questions. Home health care indemnity policy. Number 1, do you have any health insurance, including home health care, long-term care, or similar coverage in force at the time of this application? Yes or no? Number 2, if the answer to question 1 is yes, do you intend to replace your current health insurance coverage with the policy applied for? If they say yes, they're going to replace their other coverage with Standard's home health care. Standard most likely won't issue the policy because this is not intended to replace policies like Medicare Advantage, Medicare Supplement, or ACA or Obamacare coverage. This is an indemnity plan that pays on behalf of any other coverage you have. Number 3. Really the first health question, number 3, are you currently living in a nursing home or assisted living facility or currently receiving home health care or similar type benefits? And if they answer that yes, then Standard's not going to issue the policy. Number 4, are you physically unable to perform routine activities such as bathing, dressing, eating, toileting, or transferring to or from a bed or chair? So questions 3 or 4 are really your only health questions. Very simple. Either they're living in a nursing home or assisted living facility or they're not, or they're receiving home health care services or benefits, or they're unable to do any of the activities they live in. If they can say no to those 2 questions, then you already know the policy is going to be issued. So it's not guaranteed issue, but daggone, it's pretty close to being guaranteed issue because it's very, very limited underwriting. Number 5, do you acknowledge receipt of an outline of coverage for this policy? And you'll see in a few minutes where there's a simple 4-page outline of coverage that you would leave with the applicant, and it would explain benefits that they've chosen in detail. Now, as we scroll along to the next page, notice it says applicant A and applicant B. This is where you will check off how they would like to pay their premium. Again, monthly payments have to be bank draft or Standard will allow a monthly bill, not a monthly bill, but a paper bill sent out for quarterly, semi-annual, or annual payment. Now, under applicant A and B, each one would also check off which plan of coverage they want, either classic or deluxe, or adding the extra benefits rider to either classic or deluxe. And keep in mind, if you had two people in one house or two applicants here, they don't have to choose the same coverage. One could choose classic, the other could choose deluxe. Makes no difference. And then simply note their premium to the side there where you see initial premium amount, what each applicant's premium will be. Now, as we scroll through this, we go down to the section there at the bottom that's very, very important. If accepted by the company, the applicant or applicants request coverage to be effective. It could either be date of application, date of issue, or other. Now, let's say that your client says, hey, I want the coverage as soon as possible. Then check off date of issue, and if it's a bank draft case, you're going to provide the bank draft information. You're going to fax that application into Standard. Right now, they being Standard, are issuing these policies and approving them in less than 48 hours, and then they also send out simultaneously the bank draft information to draft the account. And so technically, you're talking about 48-hour issue or less turnaround time with the case being issued and the draft going out, happening very, very quickly, and that policy getting issued. Now, let's say that you go out to see the applicant and they go, I want this coverage, but I can't pay for it until next month. Can you come back and get my premium later? Well, Standard does what a lot of companies do, especially in the final expense business. They will allow you to request a draft and effective date out to 30 days out from your policy or application signature date. So you could request that the first draft and the issue date be up to 30 days out from the app date so that the client will have time to get money in their account to pay that first premium. So that's really nice. It would save the agent from having to make 2 trips to go back out a second time to pick up the money. Now, in the right-hand corner, policy to be delivered to the applicant or the agent. Standard will allow you, the agent, to choose how you want to handle policies being sent back out. Now, as we go down to the next page, very important, you'll see if eligible for Medicare, I or we have received a guide to health insurance for people with Medicare and the important notice to persons on Medicare, yes or no. You would check that yes. And under that, if selecting the extra benefits rider, you will be able to help them designate a beneficiary. Now, why is that needed? Well, remember, in the extra benefits rider, there was a $10,000 accidental death benefit, so Standard would need to know who to pay that money to. Now, under that, applicant A and B, simply put what you're going to do. It says the sum of blank dollars, which is the initial premium for the policy applied for, has been either paid to or authorized as a draft on my account by Standard Life. Typically, we see monthly bank drafts, and the client's also wanting Standard to draft the initial premium. So a lot of times, most of the time, you'll see that second box being checked off, authorized as a draft on my account, and then monthly being selected over to the right-hand side. Now, keep in mind, Standard will do a a direct bill for not monthly, but quarterly, semi-annual, and annual payment. Now, scrolling along to the bottom of that page, you'll see where you have signatures. The client is going to attest to the application by signing applicant A and sign it city and state, signature proposed insured and date, and also you'll notice applicant B, if there is an applicant B, for signatures as well. And then as we go into the next page, page 7, we see the agent's information. Signature, producer, agent. Keep in mind, Standard Life and Casualty will allow 2 agents to split commissions on one piece of business. Very, very important. And then at the bottom of the page, bank draft authorization. I know we've all seen, if we're already in the business, how we get the bank information plus a voided check to set up the bank draft. Now, one thing I failed to mention as we were coming through the previous part where the applicant right here has to sign when they're buying the coverage, or the insured has to sign. Standard Life and Casualty does not require that the agent witness face-to-face the applicant's signature. No face-to-face requirement in seeing the applicant sign by standard. So what does that mean? Well, agents who have a client base that they already have, or they're good on the phone, can simply call out, speak to a prospect, explain the benefits, go ahead and fill out the application, and then tell the applicant that they're going to mail it, email it, get it out there to that prospect somehow, and the only thing the prospect needs to do is sign it and send it back. Well, that's a nice way to be able to handle this, because you'll have a lot of prospects who are excited about the plan. They're going to be glad that you can just send it out. They'll sign it, send it back. That's going to save the agent a trip, and it may speed up that process. So keep in mind, no face-to-face signature witnessing is required. Now, as we scroll back down through, we talked about the bank draft authorization. Don't forget to attach a voided check. We go down to the next document. This is simply a form that the insured or applicant is acknowledging that the home health care plan is not a Medicare supplement policy. So this is really like a disclosure. As we scroll along, we get to the next item. This is your outline of coverage. Now, simply put, it's about 4 pages. It really does a great job of explaining the policy that you've just described. And you want to leave a copy of that with your applicant. And keep in mind, standard doesn't require that this outline be signed and returned when you're faxing in your new business. You just simply have to leave that applicant a copy as we scroll through that. Now, that is your application booklet. The next thing I want to do is let's go over to the agent guide. Now, I'm not going to read it word to word to you. It is like 22 pages, but the nice thing about the agent guide is it does a really good job of emphasizing everything we just talked about, like your plan description, your rates and premium payments, guidelines. You'll have definitions. You'll have underwriting. You'll have definition of the pre-existing condition. You'll have all these items in here that will help you learn the product inside and out. But I want to mention to you, if I may, I want to scroll down, if I can find the section about your optional bank draft dates. And very, very simple, but one thing worth mentioning to you. And I'm going to scroll right through this till I get to that part. And it should be coming up. Right, here we go. Now, this is going to be probably page 8 of the agent guide. What are the effective dates, which also correspond to the draft dates? It'll mention here the 1st, the 3rd, the 5th, the 10th, the 15th, the 20th, the 25th, or the 2nd, 3rd, or 4th Wednesday of each month, which helps coincide with possibly Social Security direct deposit. So at your leisure, please go back and review your agent guide for any particulars, like what are the optional drafting dates and how would that work. But the rest of the guide is going to pertain to maybe some definitions, how the plan works, stuff that we've really already covered in your consumer brochure. Underwriting. Remember, there's only two basic health questions that help them qualify, and it'll also talk a little bit about how your insured or policyholder would file a claim. And while we're talking about that, let's go over and review the actual claim forms. Now, the first claim form we're going to review is simply the 2-page document that if your insured needs actual home health care services, like the registered nurse or the therapist or whatnot, your doctor or their doctor, the physician, is simply going to complete a 2-page form that simply, and I won't read it to you, but it goes through what's the date period, what's the patient's name and address, the physician's name and address, birth date, policy number, what the diagnosis is, and other pertinent diagnoses. Now, here's the key. Number 10, can the patient perform any of the following activities of daily living without the assistance of another person? In simple terms, if the doctor says the insured can't do 2 of the activities of daily living, then they qualify for benefits stated in Standard's policy. Or if they're cognitively impaired, such as Alzheimer's, then they would qualify. Well, this qualification trigger or benefit trigger is similar to what you see in long-term care policies, meaning the inability to do 280Ls or cognitive impairment such as Alzheimer's. And it'll also mention what are the home health care services provided, like or performed, the services performed, like skilled nurse, general nurse, therapy. So your doctor simply completes that form, will sign it, date it, and get that back into Standard. Now, let's go back because we talked earlier. Let's talk about one of the strongest benefits of the plan, and that is the idea of the prescription drug reimbursement. Now, you'll notice on this form, Standard uses this particular form for the prescription drug benefit, or as we scroll down, the $150 annual physical exam benefit, or the home medical equipment benefit, where Standard paid 80% of the 2014 Medicare fee schedule up to $500 for certain items like walkers, wheelchairs, stuff of that, hospital beds, stuff of that nature. So, well, let's go back in the example of the prescriptions. Now, I'm going to take right here, and you'll see in the middle of the page, prescription drug benefit claim. I actually go to CVS for my prescription drugs. I would simply tear off the little receipt from CVS showing my blood pressure pill was a generic or what the prescription is. I would attach it to this claim form that I'm simply going to write my name, my policy number, and all that stuff on it. Check off the prescription drug benefit claim box that you see there. And then either I can mail it up here at the top of the form to Standard in Salt Lake City, or I can turn around and fax it if I have a fax machine. And Standard will then turn around, and right now we're seeing these prescription drug claims filed or processed and sent out in about 3 to 4 days. Very quick. So I tell my client 2 weeks, and they'll actually have it back a lot less, so they're tickled to death. Now, don't forget, at the very second page at the bottom, you're not required to give treating physician information for the prescription drug benefit. That doesn't pertain to the drugs. So simply your insured or a policyholder would sign at the bottom and date signed, and then, like I said, send in the receipts from the prescriptions with the front page being filled out, and then they're good to go. So when we look at that, the claims process is very simple. We are excited how quick that process will turn around. Keep in mind that we strongly believe that your prospect should be buying the home health care plan whether it has prescription drugs or not. We think that the probability as we grow older that we're all going to need care, that probability is very high. And most clients or prospects, if their health reason gives them a choice, most of the time most prospects would rather receive care in the home than the alternative of having to go to a long-term care facility or a nursing home. Now, keep in mind, I believe strongly that this doesn't take the place of long-term care insurance. That should be the first choice that the prospect has. But if they can't afford it or can't pass underwriting or decide they just don't want it, Standard Life and Casualty's home health care product provides a tremendous opportunity to receive monies to have care in the home. So we are very excited about it. Great opportunity because it's a tremendous value to the consumer, but at the same time, it's a great way for the agent to create revenue, providing a product that they can feel good about because it's such a great consumer value. I am going to close out this session by telling you thank you for watching, thank you for listening, and we encourage any questions. Please feel free to give us a call if we can help you, or your marketing company or your upline who has discussed the product and who has got you contracted. We look forward to doing business with you and appreciate it. Have a great day.